Today is Thursday, June the 16th, and this is the SPY, and this is where we ended up at the close yesterday, having touched the 200 EMA, bounced back a little bit, and today we're sort of trading in the middle of that range, and the market's trying to decide what to do. How useful can the Ichimoku be to us? It's telling us that we're entering into a period of where behind us there's this 52 day window of a flat channel. We're looking ahead out 20 to 26 days. We've got some weakening in the SPY. So in order to be able to rely on this, we need to see if we could have relied on the clouds in these three phases here. And the way we're going to do that is we're going to go back to Thinkorswim's on-demand feature, and we're going to jump back to February the 18th. So here we are at February the 18th, where you can see that we had just hit a new high in the SPY for 52 weeks. The Ichimoku was telling us that it was full guns ahead. We were in a bullish market. The Chiku up here was pointing straight up, nothing in its resistance. We had the 9 period and the 26 period also both moving up. So let's jump ahead now. That was the expiry in February. Let's move ahead to February the 25th. February the 25th, 1 week later after that expiry, we had a drop, certainly unexpected. We weren't seeing anything in the cloud. We weren't seeing anything in the Chiku to tell us we'd have this drop. But we were only looking at the daily. If you were looking at the 4-hour, 1-hour time frames, which we're not going into in this video, you might have had some other indications. But now where are we at the end of this week? We're still in a bullish period for the next 26 days. The Chiku span has done a nice bounce off of nothing apparently. The price, however, came down and found support on the 26 period and moved up. Our Tenkan-sen is flat. Our Kijun-sen is flat. So basically it's telling us stay in the market. Let's jump ahead to one more week. Let's move now into March, and let's look at March 4th at the end of that week. What happened in the first week of March? In the first week of March, we continued to move sideways. You can see the Chiku span, which is your representation of what's happening in real time, has been flat. It's represented by this area here. We still have an upwards cloud, but we're starting to get a flattening. So the system is telling us that there's a slowing down period ahead, and we really now need to pay attention here to any potential bearish cross of those two lines. And if we're going to go down, we need to look back on the Chiku and see if it's going to get support from these candles. So let's move ahead now one more week, and let's go to March the 11th. After this, we're going to start to speed up a little bit. One more week, 1 week before March expiry, we see a drop. So we had our warning before that we needed to keep an eye because we were seeing some flattening out of the bullish acceleration. Now we have lost support of the candles, and we're actually in the trailing candles. But more important, we have this bearish signal here in the Chiku and in the Tenkan and the Kijun-sen. Would help if I spoke Japanese. So that's a signal that we ought to get out. We have lost support at the close of the day on the 50, but there's our signal to get out of the market or get out of the SPY. Let's move ahead now. Let's take it one more week and let's go to March 18th, month expiry. And we've gotten out of the market now. because we had the cross in our two moving average indicators. What happened? It was a good thing that we got out of the market because we've had this drop. The Chiku has completely lost the support of the candles, has dropped through these two averages, but has come to bounce off of the 50. At the same time, price bounced near to the bottom of the cloud and moved upwards. We have flattening here in these two, perhaps going back to a bullish cross, but we still see flatness, but we do see some upside movement in the bottom of the cloud. We're not ready to get back into the market yet. Let's not jump too far ahead. Let's go to the 25th of March. And at the end of that week, what might we have done in the week if we had been following the SPY? We still have had no cross in our two indicators. We have had this bounce here, which might have encouraged us to step lightly into the market. We've had price come back up over the 50. So although we didn't have any signals of these two averages crossing to be bullish, we did see a bit of a bullish signal here, and we could have taken a small position in the SPY and been rewarded by this move up. But it's just basically following the surface of the cloud. But look out here. Now we have a cross of these two spans, and we're getting some warning 26 days ahead on the SPY. I don't want to make this video too long. You're getting the idea. Let's move ahead now, and let's go to April the 1st. So now we're moving ahead 2 weeks to April. We've got this cloud warning us ahead with an inversion of the top and bottom spans. We continued to move up over that 2-week period, and we broke through that. We broke away from the top of the cloud. In fact, we had a bit of a gap here at the top of the cloud. We overcame resistance to pierce through the candles. We've got our bullish cross, which happened right here. So we could have gotten into the SPY here and been rewarded for a small move up, but we're still mindful of this period straight ahead. Let's move ahead now from the 1st of April. Let's go to the 15th of April. So now we're at April month expiry. We've still got the warning 26 days out, but we do have a bullish cross. What happened? Here was our bullish cross. Price continued to move up and be supported by the Tenkan Sen, but then it lost the Tenkan Sen. The Chiku span was rejected by the top of the candles here. So at that point, we had a warning that we had reached a top. And our clouds continue to tell us that we've got a warning period ahead. But this bounce here off of this area of the top of the candles on the Chiku should have been a warning for us that this could have been another top. Let's move ahead now for our last view. So here we're April the 15th. Let's move ahead to May the 20th. So 1 full month of expiry. And we're probably being very cautious in the market now because that's what the system is telling us. And what happened? So we were back here in April where we had started this bit of a move down. We came to the bottom of the cloud. We still continued in a bullish way, bounced off to continue the bullish move up here. Our cloud started to move up. As our cloud was moving up for us here, we were getting upwards movement there. We had finally come down through the resistance of the candles and broken through the top of that candle trend line. So we had signals to get back in and ride us up to 137. Remember the last few we had started to come down here, but then when the Chiku broke through the clouds, we would have joined in the fun and rided it up to 137. I'll go, if I haven't lost you yet, I'll go ahead now to the most recent update, which is June the 14th, and see what the last thing that the retrospective is able to tell us now. So let's look and see. We had been at this 137.18 right here. We had ridden based on this break here of the purple Chiku and this resistance of this bank of clouds here. We had been able to ride up to 137.18. We saw this movement down. We would have stayed in the trade and watched to see what happened with the Chiku and this wall of candles back here. We came down, we bounced off those candles, we cleared those candles and came down now to test the next set of candles. But clearly what we have going on here is a failed test of these candles. Now moving down to test these candles, we did get a move up, a bounce off the top of the candles, and a subsequent move up. We're still in the market, but look back here. Right back here, we have this bullish cross, this bearish cross right there. If we had taken a warning from the system, in spite of the price going up, we had an early warning of bad news coming, and the cloud ahead was also telling us bad news ahead. The Ichimoku system would have told us to get out here. We would have lost 3 days of upside, but we would have avoided all of this downside. So this is a retrospective of the Ichimoku cloud system and the points at which it would have gotten us in and out of the market, and as it turns out, it was pretty accurate.